Okay, good morning everyone, and you're very welcome to today's webinar. So we have designed today's webinar to give you an understanding of how PAYE Modernisation will affect your business and what impact it will have on the running of your payroll. PAYE Modernisation will involve the most significant reform of the PAYE system since its introduction in 1960. Employers will need to calculate and report their employees' pay and deductions as they are being paid. This will make it easier for revenue, employers and employees to ensure that the right tax is deducted and paid at the right time. We have three speakers presenting today's webinar. First up, we have our main speaker, Paul Byrne, who is the Managing Director at Thesaurus Software. After qualifying as a chartered accountant, Paul went on to set up and manage his own accountancy practice. Paul co-founded Thesaurus Software in 1991 with the goal of providing payroll software to Irish businesses. Thesaurus Software now provides quality software products and excellent customer service to over 100,000 businesses across the UK and Ireland. Next up, I am delighted to welcome Sandra Clark, who is a partner at BCC Accountants and a council member of the Irish Tax Institute. Sandra is on the front line when it comes to helping her clients through the new PAYE modernisation changes. Sandra will join us for our panel discussion, so welcome Sandra. We are also delighted to welcome our next guest speaker, Sinead Sweeney, who is the PAYE Modernisation Change Manager for the Revenue Commissioners. Sinead is very much on the front line when it comes to PAYE modernisation and will also deliver a presentation today from Revenue's perspective. So welcome Sinead. For our Q&A session, we will have Paul, Sandra and Sinead, and we will also be joined by Audrey, who is a member of the support team here at Thesaurus Software. We will also be joined by Laura Murphy, who is our employment law expert, who will talk to you quickly about GDPR. So we have a lot of people on today. Just to look at the agenda for today then, first up is Paul, who will discuss how PAYE modernisation will affect your payroll processing. Next, we will pass over to Sinead for the revenue presentation. And finally, at the end, we will have the questions and answers. So throughout the webinar, please type in any questions you may have into the questions tab on your control panel, and we'll try to get through as many questions as possible. Just bear in mind that there is a lot of attendees logged on today, so we might not get through them all, but we will do our best. Finally, today's session is being recorded, and we will email everyone with a link to the recording and a copy of the presentation slides later today. There's also a survey that will appear when you leave today's webinar, and so we would be grateful if you could fill it out to give us some feedback. So that's it for me, and I'm now going to pass you over to Paul to begin today's webinar. Thanks.
Okay, thanks Rachel. Okay, so first of all, what is PAYE modernisation? PAYE modernisation, or another name for is real-time reporting, is probably the biggest overhaul of the PAYE system since PAYE itself was introduced back in 1960. Now, just to mention at the start here, for any of you that were on our previous PAYE modernisation webinars, there will be some duplicate content to what you heard before, but I've tried to keep the duplicate material to a minimum. So for those who previously tuned in, this is both a refresher and an update. Okay, so currently lots of employers are being given the wrong tax credits and cut-off points, and this is because Revenue only gets payroll data once a year in the form of the P35. When they start to receive the data in real time, this will ensure that Revenue can allocate the correct credits, thereby avoiding any over or underpayments of tax. Revenue will know where the taxpayer is working and how much they are earning at any time. Many employers are not operating PAYE correctly at the moment in that they don't register new employees or they use out-of-date tax credits. This is also being addressed by PAYE modernisation. So essentially a file, much like a P35, or let's call it a mini P35, will be submitted electronically to Revenue on or before each pay run. In most cases, this means that a file is submitted either weekly or monthly. Also, the retrieval of tax credits will be automated, which should ensure that the correct credits are being applied by employers. With PAYE modernisation, we have two new main file types. One is the what's called the Revenue Payroll Notification, or the RPN for short. And this is what contains the tax credits and cutoff points for new and existing employees. So this basically replaces the P2C. We also have what's called a payroll submission request, also known as a PSR in short, and this is used to submit payroll data to revenue each pay period. So this is effectively the mini P35. So as I said before, instead of the P35 being submitted at the end of the year, there'll be a mini P35, this PSR, which will be submitted each pay period. The full file specifications are included in the links there on the screen, and we've also included them in the handout section on your control panel if you wish to download them. Okay, so what direct effect will this have on employers? So instead of a yearly P35, as I said, there will be a mini P35 submitted with each payroll run. The checking for updated tax credits and cutoff points will also be an integral part of each payroll run. Details of employees starting and employees leaving will be included in the mini P35. APIs, that's another term for you, it's called, that stands for Application Programming Interface. This will result in time-saving benefits when you're using payroll software. It enables the software application to communicate with revenue systems. So instead of the very manual routines of downloading or uploading, selecting file locations, logging in into login screens, there would hopefully be just one submit button to replace all of this in most cases. For example, look at how you download or you retrieve tax credits at the moment in the P2Cs. You log into your ROS account, you go to the Revenue Record tab, you then select P2C details, you then search the relevant tax year, then you export, which involves choosing where to save to. Then in your payroll software, you go to the relevant P2C import section. You need to select the correct file from the correct location and then import. By my count, there are probably about 9 steps involved there. With the API, it should just be one click to achieve all of the above. Similarly, with the periodic payroll submission, the PSR, which contains information similar to the annual P35, the actual transfer of this data to revenue will also be a one-click process, or one-click-ish, I should say. Because of the APIs for P2C retrieval and file submission, the actual work required each pay period should be less than it is at present. So look, in a typical pay period, the sequence of events will be as outlined here. Firstly, you enter the details of new employees into the payroll. Next, you retrieve the latest P2C information, which will use the API. Then you enter pay, hours and deductions for all employees. Then you process and finalize the payroll. Then you submit the file to revenue, which again should be a one-click or thereabouts process. And finally, you distribute the pay slips, and most importantly, I suppose you pay the employees. We are hoping that the responses to the API requests which come from the software will be answered in seconds by revenue systems. This is something we feel is important to the user experience. In the UK, where they have a similar system, the response is usually answered within 10 seconds. It should also be noted that the APIs will use the employer's or the agent's digital certificate, and this cert will need to have been installed on the computer. So basically, if the user can log into ROS on the computer, then it has the cert installed. Yes, there are no more P forms as a result of PAYE Modernisation. At the end of a tax year, the individual taxpayer will be able to view and print their official certificate of earnings and deductions directly from their portal. So this means that P60s should no longer be required. The files being submitted each pay run will have details of employees commencing and employees leaving. So this will mean that P45s and P60s are no longer required to be completed by the employer. And as revenue will be receiving file submissions each pay period, the annual P35 will no longer be required. And in addition, the periodic file will eliminate the need for P30s. Okay, so next I'm going to do a quick demonstration of how the software will handle PAYE Modernisation, and I'm just going to hope that we don't have any hitches or crashes while I'm doing this, so just bear with me. Okay, so on the screen there you have the beta Thesaurus Payroll Manager 2019 software. So I've opened a company here, Sample Company Limited, and we have the icons there at the top of the screen, which basically represent the processes that you would follow during the normal processing of payroll. So the first icon would be where you'd enter new employee details or changes to permanent details of existing employees. The next item here, which is, as I say, is marked to do, is to download the RPN details for all the employees. So I'll just click on that. Now I know I said in the heretofore that it should be a one-click process, and it probably will be by the time I'm finished developing this. But at the moment, I'm just going to show you the steps that are involved in retrieving the tax credits. So we click on RPN, and the software will contact revenue systems and retrieves the RPN details. So it's showing there on screen the details of the credits and cut-off points for the employees on the payroll. We can actually have a look at the source file that came in from revenue, and that's basically in the form of an XML file. You might be familiar with that type of layout from your P35s at present, but that's the way it comes into the software. Now we click on Update. Okay, so basically what we can see here is it's updated the credits and cut-offs for 2 employees, and basically the software was able to figure out that there were new RPN numbers for those 2 employees. So it just simply updated those employees. Now, as I say, when we actually have the final version for next year, we may just have the one click that you retrieve the RPN details, and it comes up with a message at the end saying, okay, everything's fine. Just go to the log if you want to see who's been updated. But I say for this particular demonstration, I'm showing you the steps that are happening within the software. So we've retrieved the RPN details. Our flag has been removed from the RPN icon, so we're good to go. The next item would be, as usual, we just entered the new pay details, say for any of the employees, and update. So you go through the normal process of seeing whether anything needs to be changed, and then we can have a look at the preview of the payroll. So there we have this week versus last week, and again, this will all be very familiar to you if you're using Thesaurus Payroll Manager at the moment. Nextly, you go to update the payroll, and just click on Update. Again, very similar to before. It's now updated. And straight away there we have one outstanding showing in the PSR tab, or the PSR icon. So we click on that, and the first thing it suggests we do is prepare the PSR. So we do that. The file is prepared. Again, I say this will probably end up being one click, but I broke down the process just to give you an example, or to give you an idea of what's going on in the background. We can also view the PSR in that case, and we have the XML version there, and you can see like it's very similar in some respects to a P35, except it has all the information for that particular week rather than the end of year. There's another type of file that I prepared there in the background, which is called a JSON file. That JSON file, it just revenue will accept 2 different forms of submission. There's JSON or XML, and at the moment we're considering which one to actually use in our submissions. So the file has been prepared, so now we go to submit the PSR to revenue, and again it'll be contacting revenue, it'll be sending the PSR, it'll process the response from revenue, and now it's coming up with submission successfully received. So we no longer have anything outstanding there. So after that, it just remains to go on and print the pay slips, pay the staff, and do whatever reporting you need to do. So as I say, it really should involve less work, I think, for most employers. So I think that demonstration worked out fairly okay. Nothing crashed. So we just go back to the other screen, Rachel, there. Okay. Okay, it's actually, I'm going to ask Laura to join me here. The next section I was going to cover any recent updates and changes, and There haven't been any in the last few months, so I'm going to just steal this little segment to give you a very quick overview of GDPR, which is coming upon us quite fast. We do have a major webinar on this on the 8th of May for employers, but I have Laura Murphy here, who is our in-house expert on GDPR, and she's just going to give you some highlights of maybe what you need to be considering at this stage. So thank you, Laura.
Perfect. Thank you very much, Paul, and hello, everybody. Yeah, Paul asked me to speak for a couple of minutes on GDPR, and I'm not sure if that's actually possible because it's such a large topic, but I'll endeavour to give you just highlight a couple of key points for you this morning. So I suppose first and foremost, what is the GDPR, the General Data Protection Regulation, and it comes into effect this May, on the 25th of May this year. The overall aim of the legislation is to put greater controls around how personal data is managed. I suppose if you look at our current data protection legislation in Ireland, that dates back to 1989. So that very much predates how we use data today in the internet age and the age of social media as well. So definitely an update was required, but that's not to say that it hasn't caused a headache for many small employers out there. When we talk about data in the employment context, I suppose the areas that it covers will be information obtained from an employee during the recruitment process, regardless of whether or not you end up eventually hiring them. And it'll also include information you hold on your current employees and then previous employees that have moved on. And you may have that information saved in hard copies on personal files, or it may be held on systems such as your payroll systems, such as Thesaurus or BrightPay. So just to highlight, so 3 points today. Under the GDPR, your employees, they will be considered data subjects, so that there's data held on them. And as data subjects, your employees will have some increased rights around their data and the data that you hold on them. So these rights, I will just included some of the rights here today, but the first one is the right to access. Now this isn't a new concept, but employees will be able to request access to the data that you hold on them. However, what is new with the GDPR is that there's now this new recommendation, and I stress recommendation, that where possible, employers should provide their employees with access to a secure self-service login where they can view the data stored on them. And this backs up the whole concept of transparency and ease of access to data, which kind of underpins the new regulations. The second point I want to just discuss briefly again is the right to rectification. And now again, it's not a new right, but it's kind of enhanced, I suppose, with GDPR. And the right to rectification, here individuals are entitled to have their personal data rectified if it is inaccurate or incomplete. So as I said, it's an existing right, but what I want to point out here is that as it is, the onus is on the employer to ensure that you keep your employee records up to date. And certainly if you were to email out or post a payslip or a P45 to an incorrect address, that's, you know, the responsibility lies on you for having sent it to the wrong address. So therefore, what I would advise employers is that you need to be taking steps that ensure your employees' records are kept up to date, and where possible to kind of give the opportunity to employees to make those updates, and for them to update you when things change. So, you know, possible options there would be to ensure you have a contract clause in your contracts of employment that state, please update us when your details change. But equally, that might be where a good self-service platform or a login portal might help, where employees can just log in and update their data. And that would certainly kind of put your best foot forward in terms of GDPR prep as well. And then just the, the final point is the right to be informed. The final point, but definitely not the least important, arguably one of the more important ones, is this right to be informed. So going back to our concept of transparency, employers must be very clear with employees about what information you hold on them, what you do with it, why you hold it, how long you're holding it for. So up until now, and historically, the common practice has been for many employers right across the board, is just to include a standard clause in your employment contract regarding processing of HR data, HR and payroll data. But under the GDPR, that's no longer going to be sufficient. So what employers now need to do is to go away and to review your data protection policies, possibly writing in new employee policies. And in these policies, you're going to have to kind of go into detail on exactly what data you hold and why you're doing that. And that will be as kind of spelling it out that we hold your PPS number, we hold your bank account details so as we can process your payroll. But it's literally as obvious as setting them out, but really important in terms of your GDPR compliance. So that's really just a few key points that I'd like to touch on today. As Paul has mentioned, we have a webinar later on in May where we'll be going into it in a lot more detail as well in relation to how you can prepare.
Okay, thank you, Laura. Yeah, there's a lot involved in that GDPR, and it's coming around very fast. Okay, and actually one of the things I was thinking about when Laura was talking about data there, the information that I showed you in the demo, when I showed you names and PPS numbers, they're all fictitious, by the way, just in case you think I'm using real people's information. Okay, so the next part of PAYE Modernisation that I wanted to cover is the subject of corrections. And this, I suppose, again, this comes into the whole on or before, where the actual periodic return must be submitted on or before the actual payday. So starting with that, in my view, it'll probably be easier to just submit after finalising each payroll in much the same way that, say, UK employers have been doing it for the last few years. At least you know the payroll is done and dusted when you close out of it. I have experience of running a few UK payrolls, and I've gotten into the habit of sending their equivalent of the PSRs, the FPS. I got into the habit of sending that straight after I finalise the payroll each period, and it's actually quite easy to get into that sort of habit. If a submission is incorrect, a correction submission can be made by the software. If the correction means that more tax is payable for a previous tax month, revenue may apply interest. Also, a correction after the month's close-off or sign-off date, say after the 23rd of the following month, will be seen as a change to a statutory declaration. And if there is a constant pattern of corrections for particular employers, or there's a pattern of submissions, late submissions, revenue may take corrective action, so you may just come on their radar. And just a note on how corrections are dealt with. They're dealt with on the basis of follow the money concept. So if an employee is over or underpaid in a period and their pay is adjusted in the next period to correct this, no correction submission is actually required because the payroll is reflecting what was actually paid. If an employee is paid an amount different to what it says in the payroll, then a correction submission will subsequently be required. And this is a couple of other points, somewhat related. Towards the late, or from June of this year, the payroll software will prepare a return much like an employee register, or for example, the P35 without the figures, for submitting electronically to revenue. And this will enable revenue to have as accurate information as possible for when the new system starts in 2019. So Ross will start to seek this submission for all employers, I think from June of this year onwards. Another item I just wanted to cover very briefly. One of the main shortcomings in the UK systems is the difficulty in reconciling taxes owed where HMRC's figures are different to what the payroll says is outstanding. And these differences are usually due to HMRC duplicating employments where they receive more than one employment ID for the same employee. And this can happen quite easily when employees are moving from one system to another. Unfortunately, with the UK system, there is no facility to query or drill down into their figures. One of the features of the new Irish system will be an API whereby the payroll can query the data submitted so that the payroll can then perform a reconciliation between this data and what it has on file. So the next thing, I think this is probably one of the biggest challenges of PAYE Modernisation. The technical side of it, between revenue and the software developers, we'll get that right, and it'll be very seamless. But one of the biggest challenges I see is the whole thing of having to submit the return on or before the pay date, because this will involve quite a big change, I think, for some employers. say, for example, you've hospitality or construction businesses where historically payments might have been made on a cash in hand basis, or the reporting would have happened in the payroll much after the event. And I'm just going to ask Sandra here, who's in practice, and she's also a council member of the Irish Tax Institute. What do you think are the big challenges there?
Thanks, Paul. Yes, good morning, everybody. I think there are going to be some serious challenges for the smaller employers, especially where it may be a family-run business where the hours are not necessarily set. It's not a standard monthly or weekly payroll. Challenges where maybe in a lot of, as mentioned there, the hospitality sector, they may traditionally get paid on a Saturday or Sunday. If you're having to notify somebody to whoever's administering the payroll to make the notifications to revenue on the Friday, if it's somebody in the office, the hours could change very easily over the weekend due to maybe somebody being sick, not turning in, may have to work additional hours if additional functions are being held. So it's going to be very, very difficult for those type of industries to make the payments on or before. I suppose if you're, like, one of the challenges even is for maybe smaller employers who might use a payroll bureau to do their payroll. If you're contacting that person, if they're going on holidays, you're then trying to, I suppose, forecast what the payroll is going to be for the next 2 or 3 weeks. And there could easily be maybe even a change of employee in that period of time. So certainly, I think for certain industries where there's not like a standard payroll week to week, and depending on overtime, unless you're paying a week in lag or a month in lag, there's certainly going to be challenges meeting the on or before criteria. There's
a lot to be said for paying a week in arrears, really.
Yeah, and I think this is something that some employers are possibly going to have to consider over the next number of months in trying to change that basis, which is not always easy to do because there's going to be resistance then from employees as well, because obviously it's going to result in a delay then in payments being made, or maybe trying to claw it back over a period of time. But certainly I think it would make the payroll process smoother for employers if they can ensure that they're on a week lag or a month lag, as the case may be, depending on the industry that they're in.
Yeah, I suppose most businesses would be, it would be easy enough, I think, to handle the on or before challenge, because that's the way it works. Like somebody, for example, here, people get paid monthly.
Most office jobs obviously would be, they'd be fine because they are on a monthly salary or a weekly salary, as the case may be. The other thing that employers might want to try and consider as well, and again, it's a challenge, and whether it's possible or not, is changing from weekly to monthly payroll, because obviously then that involves less processing time as well. Yeah. So it may be something to consider between now and the end of the year, if that's possible within your business or not.
Okay, thank you, Sandra. Okay, just the next subject I wanted to cover is processing manually or using payroll software. Revenue estimates that of the total 208,000 Irish employers, up to 60,000 employers still calculate their payroll manually or have no liability whatsoever. They will still be able to calculate payroll manually. However, in each pay period, be it weekly or monthly, they will need to log into ROS and enter all of the required details for all of their employees, a bit like manually completing a P35 each pay period. This facility in ROS will only be available for employers with 5 or less employees. Also, before processing the payroll in any week, they will need to religiously log into ROS to get details of tax credits and cut-off points. This again will be a very manual process and prone to error. For these employers, for their sanity alone, never mind the huge the huge time savings, it should become apparent that they should either be using the services of a payroll bureau or that they should be using payroll software. And obviously we hope to go with the payroll software route. So why you need to get things right. Employees logging into their My account will be able to see their most recent payments and they'll expect to see the most recent payments and for these details to be correct. Another reason is late periodic submissions will potentially give rise to interest and or penalties, plus the employer, if this is happening regularly, they come within revenue's risk analysis profiles. A constant pattern of correction submissions will potentially give rise to interest and or penalties, and again, they might come onto revenue's radar. And finally, because the reference number of the latest RPN is included in the payroll submission request, the periodic return, revenue will automatically know when RPN checking and processing is not happening. So for the employees, as I said before, employees will be able to log into revenue to their My Account and view what has been submitted in relation to them by the employer. Employers will be able to allocate their credits and cut-offs between multiple employments using their My Account as well. And also using My Account, revenue can be informed of any changes in employment. And at the year end, employees will be able to view and print their official certificate of earnings and deductions through their My Account. Okay, that concludes my part of today's presentation. So I'm just going to pass you back to Rachel briefly here.
Okay, thanks, Paul. Just while we're waiting for Sinead to get set up here, we're just going to play a quick 2-minute video which will give you an insight into BrightPay Connect. So just bear with us for 2 seconds while we get it up on the screen. Okay, so that was the video of BrightPay Connect there. So Sinead's scene is all set up now, ready to go. So thanks, Sinead.
Good morning, everybody. So following on from Paul's presentation, what I suppose we'd really like to do from a revenue perspective is to give you a general overview of the changes and how they're going to affect you as employers. And I do have some screenshots of how we hope the system is going to look from a ROS perspective. Bearing in mind that most of the screenshots are where you won't have the option of an integrated system, which is what Paul is offering from Thesaurus, but you may need to go out maybe at times and look at the RPN or maybe check an RPN, so the screenshots will reflect that. So what I'm going to do is give you a general overview and then run through the actual slides that will be in draft format at the moment because we're still in design phase with the actual system. So I suppose from our own point of view, the reasons why we're doing this, I suppose, are very important in terms of the context and why we're changing such a significant system, which has been with us since the 1960s, but very little has changed in terms of how we actually manage and monitor the collection and computation of the tax. While all around us, everything else has changed dramatically. So for most people, they don't have just one job for life anymore, and they may be working several employments with several different employers at the one time. And we need to be able to capture that information in a consistent manner to ensure that the people are only paying the tax that they are due to pay. Of course, payroll has changed dramatically since the 1960s, and you now have sophisticated software that assists with the calculations and the computations for each of your employees. ICT obviously has advanced hugely in that period of time, and this has allowed us now to be able to put together a real-time information system. And people expect to be able to deal with revenue in a more efficient manner. We're always amazed at the amount of people that contact us with their payslip in hand on the 1890 telephone line service and expect us to be able to help them with what has happened in this week's payroll. But unfortunately, as Paul outlined already, we don't have that information until the P35 actually comes in the following year. But now with the new system, we will be able to deal far more efficiently with those types of queries when they're presented at the telephone lines or in our public offices. For the system itself, we would see 3 main beneficiaries, the employers, the employees and ourselves in revenue. And really what we want for employers is that this system will seamlessly integrate with their existing payroll systems. We want to minimise the cost for employers to comply. We're aware that there's a significant administrative burden in processing all of the P forms that are currently required. Most of them are required by revenue and really have no additional benefits for the employers themselves. What we are aiming is that the right tax will be paid but on the current due dates. So there are no changes to the dates for when the tax must be transferred over to revenue. And ultimately this should result in time savings for employers. For the employee, they're going to have simplified online access to services within the Jobs and Pensions module on My Account. We want to ensure that they're maximising the use of their entitlements, and we have analysed the 2016 P35s and we're currently analysing the 2017 P35s, and it is evident to us that there are a lot of people out there that are not fully using their entitlements, either not spreading them between spouses or between employments. To that end, towards the end of 2019 and into 2020, we are going to carry out an automatic end-of-year review for every employee. So this will ensure that people are only paying the right amount of tax, that they're not overpaying and that they're not underpaying. We will have access to real-time accurate data, but so will the individual employees. And this is going to give them a level of transparency that heretofore they haven't had. So there's going to be a statutory in-year employer return, and this will be a monthly return, and as Paul describes it, it's like a mini P35. It will make compliance easier for ourselves in revenue because we'll be able to intervene much earlier where we see that things are inaccurate or maybe where things are slipping. We will have accurate up-to-date income details, and over time it should reduce customer contacts. Obviously, when the system goes live, we know there will be an upsurge in customer contacts, and we are putting measures in place to be able to deal with that. It will also allow us to carry out timely, targeted interventions, because in general, when businesses get into trouble, it's usually the payroll that suffers first. Either the employers maybe stop paying the individuals, or they pay them cash and don't put it through on the payroll systems. So we'll now have sight of that, and we'll be able to intervene much earlier. Just to give you an idea of what we're currently dealing with, we have 2.7 million active employments, which includes people in receipt of a pension. We have 206,000 of employees with greater than one live employment, so that needs to be captured effectively on our systems, and we definitely have a large amount of employees that have multiple employments with the same employer. We have 208,000 employers, and really I suppose our aim is to reach all of those to make sure that they understand what's happening and how those changes are going to affect them. 110,000 of those employers have less than 5 employees, and that's something that we're very cognizant of. Is a small employer who maybe doesn't utilise payroll systems, and maybe now is an opportune time for them to actually come on board and look at upgrading their system, or maybe purchasing new software to assist them with this. We do have to generate 5.4 million forms in order to fulfill the PREM reporting obligations. So those forms are now going to be gone, and that means a significant reduction in admin both for the employer and for revenue. I suppose just to remind people of what their current obligations are, and certainly from being out there meeting with both employers and payroll operators, they do tell us that this sometimes is something that slips. So they must apply the latest P2C to the person's pay. They must calculate the tax to be deducted, including income tax, USC, PRSI and LPT, and they must provide the employee with a payslip that clearly shows those pay and deductions. In terms of the revenue reporting obligations, every time somebody commences or ceases in an employment, they must complete the P45 or P46 process. Every month they need to submit a P30 with the relevant payment, and then by February of the following year they need to complete a P35 with the associated listings for each of their employees. So they're the current reporting obligations, but they are now going to change, and they are going to be simplified from 1/1/19. In order to do all of this, we have had to introduce some legislation, and that legislation, I suppose, has been covered in the Finance Act 2017, and the legislative provisions really were required in order to allow us to make changes to what has been the existing process. So really, I suppose the most significant change, and something that Paul touched on, is the whole area of honour before, and that's where the submission will now have to come into us on or before the person actually gets paid. The other significant change as well is where we've brought in a facility whereby if there is a persistent technology failure, there won't be any penalties where the person isn't able to actually upload that information due to a persistent technology failure. So I suppose our recent trials and tribulations with Storm Emma would be an example of that, where maybe power lines were out and people weren't actually physically in work to be able to actually upload the information. So all of that legislation is covered on our website, and the various changes are covered in depth on the actual website. In terms of the process flows, then just to show you how the system is going to work in very basic terms, and as Paul outlined, is that the employees to be paid will be there sitting on your payroll system. You will access the latest revenue payroll notifications. You will perform your calculations. You'll finalise your payroll. You'll send your file for processing to the bank, create your payslips, and at the same time generate a revenue report. And that will come seamlessly into revenue once you have finalised your payroll. The individual employee isn't really going to see very much difference. They're going to receive their money as normal. They'll get their payslip, but now they'll be able to view that information on the Jobs and Pensions site. In terms of getting rid of the P30s then, so if we take, for example, the instance of somebody who's a weekly payer, they will have submitted to us their weekly payroll run. At the end of the month, we will total up their tax due and send them out what is really going to be a bill. They'll then have an opportunity to look at that and review it, make sure that it's correct, and if they're happy they can accept it, or if they need to make a correction, they go in, make the correction and resubmit the information to revenue. We will then reissue the statement. As I said already, there's no changes to the current payment dates, but we will be able to manage underpayments in year, and as Paul alluded to, all of our interventions will be based on a risk analysis of what has actually been sent into us. In terms of the P45, P46 process, when an employer has somebody new starting with them, they will go onto their payroll system and insert a commencement date for that employee, and that will trigger a message to revenue whereby the latest revenue payroll notifications will be made available, and then they'll be able to run their payroll as normal. When the person is leaving, they'll simply go in and insert a cessation date, and that again will tell us that the person is now leaving that employment, and their tax and credits will be available then to transfer to their new employment. Individuals can go on and set up their own employment record on the Jobs and Pensions Service currently, and for new employees, so for somebody who's never worked in the state before, they have to go on and register with My Account prior to actually commencing in employment. In terms of the P60 process then, from 1/1/19 there will be no obligation on the employer to provide a P60. Instead, what will be available to the employee is a statement of account which will be available under My Account, and at any point when they log on, they'll actually be able to see what's contained on that P60 statement of account. So that's what will be used for mortgages, for SUSI grants, and for any lending institutions that require P60 information. And revenue will be engaging with all of those representative bodies to ensure that they're aware of those changes. So the end of year process, the P35, and certainly this is something that we know people use to try and tidy up what maybe they haven't been able to capture in a timely manner during the year. So this process is now gone, and every month stands on its own merits. So it's month on month, and really there isn't an opportunity to catch all at the end of the year. So it's important that the information that comes in every month is accurate and correct. Of course, there is the opportunity to make a correction to that monthly return, but again, there isn't the opportunity at the end of the year to go in and fix things up, as a lot of employers have been used to doing. So I suppose in terms of showing you the differences between what's currently required and what will be required with the new system. And the yellow boxes are what you're currently required to do. So every time you run the payroll, you log into your payroll, you set up the employees, you export the P45. You then have to go through the process with Ross, uploading the P45, waiting for the email, logging into Ross, downloading the P2C, and then uploading that into your payroll system. Quarterly then you had to log into the payroll, download the P30, and again follow up with the same Ross instructions. And then yearly log into the payroll, download the P35, publish the P60s, log into Ross and upload the P35. So what we hope to get to is to the top 3 boxes, where you log into payroll, set up your employee and run your payroll. Then monthly you can go in and look at the statement. If you don't accept the statement, we will deem that as the return, and that will be the amount that you're due to pay. And then quarterly, depending on how you're set up, you can go in and look again at the quarterly statement that will be there on the system. So I suppose just to give you an idea of how the revenue system is going to look, and it's important to bear in mind that this is currently in design, so it may not look and feel exactly the same as what I'm showing you today, but in general it will be something similar to this. So you have the options there of requesting RPNs, submitting a payroll, viewing the payroll, or accepting and viewing the employer statements. So if you need to go in and look at a payroll notification where the system isn't using the integrated system that Thesaurus have designed, you will go in and request an RPN either by file upload or request an RPN by using an online form. So again, it's basically a click and upload system. So you'll need your Ross Digital Cert and you'll log on using that Ross Digital Cert to request the RPNs. Having requested the RPNs, you'll get back a summary notification which will show you how many of those RPNs that you've requested have been returned. If it says there's one not returned, that means there's an error with that, and you'll have to go back in and look and see what the error is. And again, the error will be explained. You can see there it says, what do these results mean? Back then to the home screen, and this time you want to submit a payroll by file upload. So again, you're going in there and you're uploading your file or you're submitting the payroll. Again, you need your Ross Digital Cert to be able to access this if you're not using the integrated system. So once you submit the payroll, then it will tell you that it's processing your submission. And once that has been submitted, then you'll get back an acknowledgement to say that your payroll has been submitted. And then you can download that acknowledgement, and that will tell you if there are any issues with what has actually been submitted. And you'll see there on the screen it says at the one that I've just submitted there, it's processing. But once it's actually gone through, it will say completed. So the payroll submission results will show a request summary, and you'll see there the status shows that it's been completed, and it shows for the January payroll run the amount of deductions and also the amount of pay slips that this covered. So you will immediately know that if you have 52 staff working for you and this is only showing 50, that there's an error somewhere and it hasn't picked up all of the people that are on your payroll. You'll see there that's an acknowledgement where it has been completed, but there are warnings with it, so there's obviously an issue. So again, you'll be able to click and look and see what the issue is with that payroll system. Again, completed with errors. So you'll see there it shows 50 pay slips, but there's an invalid issue. So something is not correct, something has been sent in incorrectly. And again, when the system is live, there will be an option there to show what those errors are. I suppose I really just wanted to give you an idea of how it would look and feel today. Then looking at the employer services, and maybe you want to go in and view a payroll that you've recently submitted or recently updated, you can go in and look at the payrolls that you've submitted and click on the actual payroll that you want to look at because you've identified that there was an error or an issue, and that's what it will look like. And then you can go in and see ones that have been recently updated, and you can actually drill in then to the actual weekly or monthly submission depending on how you're submitting your payroll. Again, back to something that has been recently updated, and it'll show you the ones that were updated. And you can see there it says the payroll submissions were 3, and for the December one it was 1. So corrections were made to the January payroll submission. The online statement of account then is where you will go to accept your monthly statement. So you can see there the February statement has been deemed. So the employer didn't go in and accept it, but revenue deemed it as being the correct amount. And the March one is waiting to actually be viewed and accepted. So again, it's all sort of a click basis. So you'll click in, you'll review the details. If they're correct, you'll accept it, or if you do nothing, we will deem it. So that's summary details of what the employer PAYE statement is going to look like. So we'll show everything that has been returned for that period, and then you'll see there that it's due, and you have the option to agree with the above summary and then submit that. So the actual statement itself will show each submission that has come in, bearing in mind that some employers might have weekly, fortnightly and monthly payrolls. If they're all coming in under the one PREM registration, they will all be listed there. You'll see there were ones there with errors, and those will have been corrected. And then if you need to actually go in and click on an individual payroll run to go back and review what was actually submitted, you'll be able to do that there as well. So I suppose in terms of stakeholder engagement and business processes, as I said, we have been meeting with a lot of employers and representative bodies, and it is clear that employers focus on an end-of-year reporting. And really, I suppose those practices have been accepted both by ourselves and Revenue, and it's something that employers are now used to dealing with. And that process is not going to be available with the new system. So it is important that people currently look at their existing business process and are able to transform that business process to ensure that the data that they're submitting on a monthly basis is accurate going forward. It's also important to bear in mind that the real-time reporting regime makes all of these processes very visible, both to ourselves in Revenue, but also to your employees. And if they're not easily able to reconcile their pay slips with the data that has been submitted to Revenue, they will either be straight onto yourselves or straight onto ourselves to ensure that what's being returned on their behalf is accurate. As Paul has mentioned, there are options for corrections, and certainly we know that corrections form part of the payroll processing, be it that somebody has maybe fat-fingered a zero or forgotten to pay somebody, or, you know, has maybe made an error in the entire payroll and something needs to be corrected. So we're aware that there will be corrections required, but if we are constantly seeing corrections coming in from particular employers, that will push that person's risk rating much higher, and it's likely that there will be interventions, albeit information type interventions, to try and find out why this employer needs to make so many corrections on a weekly or monthly basis. In June of 2018, we're going to ask all employers to submit a complete list of their employees. And again, this is to ensure that we have all of the data aligned correctly for when the system goes live on 1/1/19. So we will be matching what the employers sent in with our records to ensure that those people that are required to be registered with those employers are also the people that we have registered on the Revenue systems. So that's something that we'll be commencing in around June of this year. In terms of change management, we have been presenting at a lot of outreach events, and I suppose at the moment our focus is on employers and agents, because we feel employees are not really going to be affected by this until the system goes live in January. So we'll focus on those later in the year. We do have national compliance imperatives, and these are sort of our strategic targets for the year, and there certainly is a focus on PREM and getting the PREM correct this year rather than waiting until 2019 to get it correct. We will be doing 2 tailored mail shots to all employers in April and September, and those are practically completed now at the moment, and they will be issuing in April to all employers. We're currently reviewing the 2017 P35L data, and as part of that we will be issuing P2Cs for employees that have come in for the first time on that P35 and have not been registered with Revenue. District staff will be carrying out employer customer service visits. So if you get a letter suggesting that revenue would be calling out to you. It really is in respect of a customer service visit, and it's to help and assist you to get ready for the changeover to 1119. It's not an audit, it's absolutely a customer service visit. We will have an intensive media campaign from June to December, and certainly there will be a lot of advertising and there will be a lot of direct information being sent out to employers. We're also hoping to run revenue regional seminars in September and October, and as part of the mail shot in April there will be an option to register your interest online if as an employer you would like to attend one of those seminars. Just to give you an idea of where we've been for the last couple of months, we certainly have been engaging as much as possible with all of the larger representative bodies, with payroll providers, and certainly with any employers that have asked us to attend any events with them. And that's just a snapshot in time. We actually have other events booked in there since I actually put those slides together. In terms of preparing for PAYE Modernisation, what we would like you to do is make sure that you have the correct PPS number for all of your employees. It's astounding the amount of PPSNs that are incorrect on our system, and also the amount of people that are using the same PPSN. Making sure that you have registered your employees with revenue, making sure that you're operating the most up-to-date tax credit cert for all your employees, particularly now that illness benefit is being taxed through the P2C. You need to check regularly that you're operating the correct P2C. Making sure that you've completed the P45 process for any employees who have stopped working for you, and looking at your BIK and reviewing that in line with the fact that the information is now going to be coming in on a monthly basis, and making sure that you're aware of your duties at the end of the year. There's a huge amount of information available on the Revenue website under Employing People. We have a tab there called PAYE Modernisation, and certainly if anybody has any questions or any feedback that they'd like to send in, we have a dedicated email address there. So thank you for your time, and I'll hand you back over to Paul now.
That was great, Sinead. Thank you very much. One of the things I wanted to say as well on the method of transmitting the files to Revenue and retrieving the tax credit details from Revenue. Obviously, the demonstration we showed was what we call the business-to-business, or as Sinead refers to it, the fully integrated system. That's the preferred method, I suppose, and it would be the most seamless and easiest for you to do. But we do recognise that there are going to be situations where maybe the payroll is prepared on one machine and another computer is used for actually submitting the returns. So we will be providing the option within Thesaurus for being able to actually download the file for uploading elsewhere. Now, the only thing about that is you'll also have to, within the software, you'll have to be able to inform the software that you have actually done that. See, if you do it through the normal integrated process, the software will know because it's actually received the response from Revenue. But if you're doing it elsewhere, like manually, you'll need to tell the software. So there's not going to keep telling you there's a return outstanding or whatever. So that's just one thing to bear in mind there, that we will be catering for all the various types of scenarios that you think that might apply to you. Okay, so we're going to go to the questions and answers. I'll just pass you briefly back to Rachel.
Okay, just while the rest of them are getting set up with the questions there, we'd just like to say if you could subscribe to our mailing list. Because of GDPR, we won't be able to email you after the 25th of May unless you have subscribed to our mailing list. So you can do this either at the survey at the end of today's webinar. We'll include a link in the follow-up email, or it can also be done on our website. So they're ready here for the questions and answers now. So I'm just going to pass you over to Audrey, who will be reading the questions.
Thanks, Rachel. Okay, so the first question, Paul, you've kind of just answered that really. It's what if Ross is on a different PC than the payroll software? How would this link happen? So you've actually just covered that. I suppose, yeah, it just wouldn't be as seamless, but,
it's
still possible.
Yeah, because a lot of I suppose the experience we have in the UK is you kind of need to know, what returns have successfully gone in and what ones haven't. It's slightly different in the UK because in the UK they operate on cumulative information. So even if you just have sent in the most recent one, it doesn't matter so much as you haven't sent in a previous one. Whereas with the Irish system, it's based on periodic figures. So it's very important that all returns are actually sent in a year. And I suppose that's to try and make sure that the employee who's logging into the revenue system can see all their information as well. Yeah.
Okay, so the next question then, if there's no P30, how do we figure out or see what our tax is?
Okay, well the software will still be reporting, or will have reports on, similar to the way the P30 reports are at the moment. So that will have the amounts outstanding showing in it. And I suppose, as Sinead showed, you can also log into Ross and see that does, compare.
Match, and the statement will be able to show how much is due.
Okay, so will Thesaurus inform us if there is a new RPN?
Well, as we're showing in the demonstration, the idea is that you click that button. Now, it will go off and find whether there are any new RPN numbers for the employees that are on file. So it will inform you. I think also Ross will be sending don't they send an email? Yeah, there's new information in the inbox or whatever.
Yeah, so that prompt will be there before every payroll to do that check anyway.
To do that anyway,
yeah, and what we would recommend is that they would go and check that the RPNs, particularly because of illness benefit, or if they know there has been changes in somebody's circumstances, that they go in and check that the latest RPN is what they're working from.
Okay, so this, again, Paul, I think you've covered this, but it's, can the PSO report be submitted manually on Ross? Also similar to the way the P30s used to be submitted. So this is the...
Yeah, we'll be providing for that. Now, I'm hoping that not very many people would need to use that, because it will be clunky. It's a bit like doing your P35 at the moment, where you have to sort of download and upload and all that sort of
You won't have that history then within the program.
Yeah, you'll have to manually. I'll have a screen where you'll be able to sort of tick, say, yes, I've submitted this, so the program will keep track of what's outstanding.
Okay, do you only submit new employee details to revenue on their first payday? Is it up to the employee to set up details with revenue?
Well, it's up to the employer. The obligation is with the employer to set them up, but unless it's their very first employment in Ireland, then they have to go on and register that themselves.
With the jobs and pensions?
With the jobs and pensions, yeah, through my account.
Okay, do you run payroll for employees leaving on date of departure earlier than at month end? Can't this be done before, where payroll operator on holiday on day of departure?
Well, yeah, I mean, we have to provide for that scenario, because a PSO or payroll submission request must be sent in on or before each payment. So if there's only one pay run for the employee that's leaving, the PSO has to be sent in for that. I
suppose it'll be similar probably to what's there at the minute, the P45 with further payments, maybe, some of this, and then it'll be a submission on its own.
Yeah.
Okay.
It'd be really clean if everybody just did it at the end of the pay period. Unfortunately, life doesn't.
Don't let anybody leave mid-month.
How dare they?
If a payroll has employees paid on a weekly and monthly basis on the same payroll, will the returns to revenue be on both weekly and monthly basis?
Yes.
Yeah, it'll be separate submissions for each payment frequency.
But they'll be aggregated together on the statement once they're under the same PREM registration.
Okay, what's the difference between BrightPay and Thesaurus? Is BrightPay the way we'll be going? Is BrightPay going to replace Thesaurus?
Well, no. I suppose maybe that's about 10 years down the road. I'm still in the job until then. No, Thesaurus and BrightPay will both be able to handle PAYE Modernisation. BrightPay does have some advantages over Thesaurus, in that it's a more modern operating system, or more modern programming language, so that it can do a bit more. But yeah, Thesaurus Payroll Manager is still quite capable of.
Two products,
Yeah. I suppose BrightPay probably has the advantage, obviously, of the BrightConnect for which helps with the GDPR requirements.
Well,
Thesaurus is Connect as well.
Connect. It wouldn't be as quite as, it doesn't synchronize back from Connect into Thesaurus, but it doesn't handle holidays the same way. The BrightPay would be better, I suppose, in that.
Yeah, it's a one-way sync, I suppose, for Thesaurus. For a BrightPay, it's two-way. I suppose just one or two other quick differences between BrightPay and Thesaurus. BrightPay would cater for increased pay frequencies. So with Thesaurus, you can either have weekly or fortnightly along with monthly. Where BrightPay, you can have weekly, fortnightly, 4-weekly or monthly. You can also design your own reports. So there's default reports there, but very easily you can tell BrightPay what you want to include in a report. So you can very easily create your own reports. You can split an employee's pay across multiple departments in a pay frequency, where with Thesaurus it's one department per pay frequency. So there's some of the key
so BrightPay wins is what you're trying to say.
I'm not saying
I
that.
No,
Retirement's coming sooner.
No, I guess that I suppose a lot of people are very used to using Thesaurus and they don't want to change. So Thesaurus will continue to be developed for the foreseeable future.
Okay. What do we do when an employee is leaving? If there's no P45, is it all just done with their PPS? I suppose the leaver information will be included in the submission. And maybe something in their revenue account.
That will trigger that the person has ceased with that.
Yeah. So, and then obviously when they start their new employment, the new employer will be registering the employment on the RPN and requesting their tax credits and cut-off, which obviously should be updated by the previous RPN submitted by this.
So it eliminates where people leave maybe and maybe they don't leave on good terms and they don't get a P45. So it eliminates all of that by, even if the employer doesn't put in a cessation date, the individual can go on and register their new employment.
Can the individual register a cessation date as well?
We're looking at that at the moment. We haven't tied that down fully, but we're looking at it.
Okay. Somebody's just asking there, how will an employer direct debit payment affect the returns?
Direct debit will remain as it is, so there's no change to that. And we're also going to have the option of a variable direct debit if people would prefer to pay just the amount that's actually due for that period.
I suppose with the direct debit, they need to ensure that it's covering their liability, because otherwise I'm sure revenue will be after them.
And all of those direct debit facilities are agreed with revenue in advance anyway.
Perfect.
Actually, that's very handy. The variable direct debit.
Variable direct debit,
I have to admit, sometimes I forget.
Don't tell them revenue that.
Actually, no, I do, and I'd remember sort of maybe a few days after it's actually due. Oh God! And you do have to go through the whole process. So I mean,
so the variable will be just the amount that's due.
I suppose this is more common. It just says this is going to make all accountancy practices employ a dedicated payroll person. This cost will be passed to all self-employed people. Most of our clients have 1 or 2 employees.
Yes.
Okay, Sandra is in agreement there.
It won't be that bad.
Well, it's certainly going to increase the amount of time involved in maintaining payrolls for the smaller employers who only have one to say 3 or 4 employees, because you're going to have to lift that file an awful lot more now than you used to. Like if they're paid weekly, you're now lifting the file once a week, having to go in, do a particular function, whereas at the moment you might only update their payroll records every quarter or every bi-monthly period, depending on when you can do VAT returns.
I suppose we are looking at options for the smaller employer, maybe particularly those that have a static payroll and where there may be the option to front load that information, where they know the person is only receiving X amount every week, and that they'll be able to upload it either on a yearly basis or maybe on a 3-monthly basis to try and eliminate the whole element of having to lift the file every week.
Would certainly be very welcome, because certainly it's going to be a huge challenge otherwise.
I guess those first 6 weeks as well in 2019, where they both overlap.
So somebody's just asking them, how will it work linking our payroll software to revenue? Will Thesaurus have access to our ROS cert and password?
Well, basically what we do is we utilize your digital cert, but I mean it's you that's doing it. It's on your computer. We, as a company, we don't have access to anything like that. It's the software that'll be accessing the cert. So you basically tell the software where the cert is located on your machine, or it might even be able to automatically find it. I've yet to work that one out. But it would then require you to put in your credentials, your password again anyway. So I suppose that's the way it'll work. It's a bit like logging into ROS.
Yeah.
But we'll try and make it as easy as possible, and that I presume we wouldn't have to actually put in the password each time.
No, sure would remember it, yeah. Okay, will Thesaurus cost more as the program looks like it will be doing more than it is currently?
No,
Sounds like a green light for an
there's no
increase
plans
there.
to increase the price as a result of this.
Okay, so the next question then, I suppose this is a good question. So if the payroll system is integrated with revenue and it happens that the payroll system collapses and there is no backup to restore the data has to be entered again from the beginning. How do you avoid double entry of the payroll data and payment requests from revenue? Will the system be prepared for such a situation?
It's a really good question.
Yeah.
Okay, who answers that one? Well, I mean,
Sort of a combination, isn't it?
Yeah. I mean, the first thing I say is, that the backups are going to be so much more important under this new system because, you know, if you have an old backup that you're restoring, it won't know what you have submitted using PAYE Modernisation. So the ideal situation is where you're backing up as soon as you send in that PSO, you back up.
Yes, I think we'll be changing it rather than backing up before, backing up after the period.
Yeah, and you know we'll be trying to promote that, you know, you do this backup religiously, or we'll even have it. We'll probably have it availability through our BrightPay Connect or Thesaurus Connect, that it'll do it automatically if you've basically ticked a box at the start of the year. But we're working on that one. But yeah, it's extremely important that the backups are kept more so on the new system than on the old. We hope to have some way. We've been talking to revenue about being able to extract the information that has been submitted so far to them, and we're not sure where that's going to be, I suppose, at the start of the new system. At the moment, it's only returning information related to tax liabilities rather than all the payment information as well. Which would be ideal if we could get that back, because then we could effectively build the payroll
Again
by doing this, you know, this request from revenue. But I'm not sure whether that's going to be available for the new year or not.
Okay, thank you.
And I think there's one other thing as well. I think if revenue detect a submission coming in, to duplicate submissions, they will return.
Yeah, we will.
If it had the same run reference, is it?
Payroll run reference,
Yeah, there'll be a unique ID. Yeah.
Okay. Somebody's just asking, will BrightPay, the UK system, be available for Irish payroll? So we do have BrightPay Ireland. We have that since 2013. So you can download that from brightpay.ie if you'd like to have a look at it. It'll automatically download as a trial version, which lasts for 60 days. Okay. Somebody's asking, what happens if I have to revert payroll? Reverse, I'd say.
Oh yeah, well,
yeah.
Again, I suppose the way I'm handling that at the moment, I recognise that sometimes you might actually run the payroll and you realise that, oh, I haven't imported the hours that relate to this week. And that can happen quite easily. So you've run it, you've sent in the submission to revenue, but you haven't yet paid the employees, and you realise, oh, I have to redo that again. Yes, that'll be easily handled, and that'll create a correction route submission automatically within the software to basically reverse with revenue that submission. If there's individual corrections to make in relation to, say, 2 or 3 weeks ago, again, the system will handle that. It'll prepare a correction submission which will replace the original submission that went in for that particular employee. And again, I'm thinking more about bureaus here, where they're not told about employees, say, that have started, or employees that have left weeks ago. Again, we'll handle that with additional submissions or replacement submissions, depending on what the case is. But yeah, no, we have to handle all of that.
So do you recommend BrightPay for a company with less than 5 employees? So I guess BrightPay or Thesaurus,
yes. Both
are very suitable there for an employer with 5 or less employees. Somebody's just asking there, will they be able to prepare pay slips in advance, for example, for summer holidays, if net amounts each week are the same? So absolutely, it's on or before, so yeah, you can do that in advance.
Yeah, so you can basically prepare 3 weeks payroll at the same time, make the notifications to revenue, and then if there is happens to be any changes, it can obviously be corrected then in the following week when you're back from holidays.
Thank you. So somebody's just asking, Sinead, I suppose, if employees request a change of credits on my account, how long would it take to show?
It should be more or less fairly instantaneous. So you know, it should happen, and then a new RPN will issue when the payrolls are, you know, coming in again for the next payroll run.
Perfect.
Yeah.
So somebody's just asking that if there's no P45, is it up to the employee to let revenue know that they have left the employment, or is it still handled on Thesaurus? So that's something that will be included in the PSO, so that's submission.
The date of leaving
will suffice for instead of P45.
Okay. What do you do if credits are wrong when making a payment?
Well, the employer is really relying on the credits that have come back through the
revenue payroll notification. Yeah. So there shouldn't be instances of
being
wrong.
Operate as per the revenue payroll notification, and then if that isn't correct according to the employee needs to contact revenue.
Or I think it's also a situation where sometimes maybe the notification might result in maybe a negative, hardship or negative pay.
So certainly there's an opportunity there if somebody needs to, you know, change something around, they'll be able to do that, but obviously they need to notify us that that's the situation. Sometimes as well it's because the credits are allocated to another employment and the individual may not have told their employer that they have another employment. So it is best to operate as per the RPN.
Okay. So Sinead, we have a direct debit set up with revenue each month at the moment, and at the end of the year either pay any underpayment with P35 or claim an overpayment. Will we be able to continue this?
Yeah, well, the direct debit facility is going to remain, but I suppose they should be able to, you know, much more efficiently manage what the actual amounts due are, because they will have a monthly statement now.
Yeah, because you're not going to like an underpayment.
Exactly, and we would prefer that people weren't in an underpayment situation, because by rights, what's being sent in every month now is visible and should be correct.
Okay, so somebody's just asking there, a new employee who is new to Ireland and has not yet received their PPSN or registered with Ross Online, will we have to wait to employ them before they have the PPSN? Will they have to wait until afterwards?
Yeah, I mean technically they should have a PPSN when they're starting in the employment, but if they haven't and they have gone through the process and they're waiting for it and maybe there's a delay for whatever reason, certainly emergency tax can be applied in those circumstances. But as soon as the PPSN comes in then and it's notified on the system, it will automatically then trigger the RPNs.
And that would be emergency with zero, but zero credits.
Zero, absolutely, yeah.
Okay. Regarding payments, do they have to be done every month or at the end of a year?
It's the same as they are now, so there's no change to the payments.
Yeah. Is monthly the only option for payment?
It's the same as they
If
are
you're
now,
quarterly,
so depending on what the arrangements they have set up. Yeah.
A lot of questions around the payments, I suppose. We currently have a monthly standing order to revenue. Will this no longer be an option?
No, it'll remain.
Do I still have to P45 employees through Thesaurus to get them off my system? So
it'll be a slightly different process. It'll be more based on putting in a date of leaving, and then in the odd case where there's additional payments or holiday leave to pay, we'd have an extra couple of boxes to deal with that. But it's mainly the date of leaving that will basically trigger their leaving.
Yes, so there won't be a P45 process as such. No.
Okay, Paul, is it likely that Thesaurus will provide a system which will be affordable to employers with 5 or less employees? It is very common to have a company with 1 employee only.
Okay. I suppose a bit of an announcement. We are planning on actually doing a version of Bright Pay that will be free for 1 employee. So I think after 1 employee, I mein, we're quite cheap anyway, really.
We don't like the word cheap. Good value.
We're inexpensive, yeah. We're inexpensive.
Nobody likes to be cheap, Paul.
I don't mind. I used to get called cheap and cheerful all the time. Yeah.
Sinead, I have employees who will struggle to use employee online portal, elderly and not computer literate. Is there any alternate way for the employee to get their annual statement?
Yeah, well, I suppose we do have to be cognizant that there are people out there that are not e-enabled and won't be able to access their annual statements. So there will be an option for them, possibly maybe to phone us, and we may have an integrated system on the phones whereby they can request an annual statement and we will issue that in a paper format. Now we're looking at all of that at the moment and the options for those people. But we're encouraging most people to try and come online and certainly try and use the My Account. And we hope to run some sessions maybe into 2019 for employees, you know, where we'll have open sessions to actually show and guide them how to use the systems.
Thanks, Sinead. How does an employer manage locum workers as now they are emergency taxed?
Well, my understanding is that they're actually even supposed to be on a week one basis.
A week one basis, yeah.
They should be on a week
They're
one
on
basis.
a week one basis, yeah.
With credits and cut-off points?
Yeah.
On a week one?
Yeah, on a week one basis.
So
That's how they should be.
So you would expect that to be the same?
Yeah. Because obviously revenue will be now providing, it will be as per the RPN, and revenue should have their details and to be aware of in the background of the multiple employments.
Yeah.
Okay, so this is a question in relation to illness benefit. So with regard to illness benefit, there could be several weeks delay from the department sending notification of payment of the illness benefit. How should this be processed? It obviously won't be able to be processed in the period the employee is actually sick. Will Ross view this as incorrect processing? So I suppose this is a bit...
I suppose the whole process now with illness benefit is going to come through on the P2C as it stands at the moment, and then it'll feed into the RPN. So while the person might be out sick this week, it probably will be 3 or 4 weeks before that's actually notified on their payroll. But the person will be aware that they've been out sick, and they should know that there's going to be a change in their actual payroll circumstances.
Yeah, I think this person may not know maybe that the illness benefit has changed. So it's completely handled via the P2C or what will be the RPN.
You'll get a revised RPN, or at the moment a revised P2C, and then you operate as per that. But yes, there will be a little bit of time delay by the time it's all processed and comes through on the payroll.
Okay. Just another question in relation to the pricing of Thesaurus and BrightPay. So Paul has said that there's no plans for a price increase. So if an employee leaves and a leave date is entered and submitted, it's then later realised that they are owed further pay, holidays or bonus. How should this be processed?
If the person has moved on and their tax credits and everything will obviously be allocated to a new employment, then it will be processed with 0.
Absolutely, yeah. And there'll be facility within the software to...
But the RPN request will show that.
It will show it. It'll come back and it'll show a 0. If their tax credits
but will they have to set the employee up again, or will you have an option to add a payment to a leaver record?
Okay, put me on the spot there.
I'm
still developing that side. That's one of the to-do items I have, and I don't exactly know how I'm going to handle it yet.
Yeah, okay, but either way it'll be 0.
It'll be 0 points.
Unless they haven't gone to another employment.
Exactly.
Okay. Yeah, again, another question about payment and quarterly. So, I mean, if you're on quarterly now, there's no plans to change that. You'll stay on a quarterly payment schedule. Can you future date return if going on holidays? Absolutely, so they can be sent in advance. How will health insurance P35 declaration be incorporated? So I suppose that's been removed under PAYE Modernisation, which I think will be welcomed by all of us.
Absolutely.
It's only the amount that's subject to BIK.
Yeah, just the amount subject.
We are pension administrators. If somebody passes away, what replaces P45?
It's the same process. It'll be a cessation date on that actual payroll.
Another one about submissions in advance. So absolutely. Do I need to apply for a new RPN, or do I continue with the ROS that I'm currently using? The new system comes into place. I'm not sure if that is really about digital certs or RPNs, but either way, the system will prompt you to check for an RPN, and their digital cert will remain.
Yeah, I suppose we're kind of hoping as well when the system kicks off on the 1st of January. I suppose a lot of people, actually, some people will be processing the payroll in December for January, that when you click the button within Thesaurus or BrightPay to actually retrieve the RPN details, that they will be available in time, but I presume that's all part of the plan, that it'll be probably available from early December.
Yes.
Yeah, and this is all part again of this list of employees.
I mean, they're currently normally available from early December anyway, so it would be the same.
I suppose in the past it's been a case that sometimes the P2Cs can include employees that aren't part of the payroll, and doesn't include some employees that are part of the payroll, but that should be tightened up considerably with this whole list of employees.
Okay, we're nearly there. Is the Thesaurus software also compatible with the employee self-service? So we did mention that briefly. There is a Thesaurus Connect available.
Yeah.
It doesn't have quite as much functionality, but certainly there is an employee self-service option.
Yeah, it's a little bit different, I suppose, particularly on the calendar side, in that the calendar for leave and such like is handled solely in the cloud when it comes to Thesaurus Connect, whereas with BrightPay Connect, the calendar is identical between the cloud and the payroll itself. I suppose I'm going to put on my marketing hat here. So we've no increases in price on payroll software. One thing you might consider is actually taking on board Connect, because it does tick a few boxes in relation to what Laura was talking about earlier on GDPR, and employees being able to have access to their, not just their history of pay slips, but all the personal details, being able to change their details. And also it also facilitates a secure backup being available at any time for restoring from.
There's further information about on our website anyway as well.
Yeah. And actually one of the things that the employees like about it as well is the ability to actually see where they stand holiday-wise, what they've claimed or what dates that they've logged as well. So.
Okay. If an employee is paid weekly or fortnightly, would it be possible to submit the return to revenue at the end of the month, say for a small business owner?
No, it has to be submitted absolutely every time they run that payroll and pay the person. So that will mean they have a weekly one or a fortnightly one, or a combination of both.
Perfect, thanks Sinead. Currently pay Ross direct debit. When you tick box on return, how will this be handled in integrated return?
Well, anybody that's on direct debit will remain, and then
I'm not sure where that tick option is.
There is a tick option there.
When you're doing your P30 online?
Yeah,
sorry,
exactly.
Okay.
So if you're on direct debit, obviously there will be a marker there, but we'll be, tying down all of those parameters as we're nearer the completion time of the actual system.
Perfect. This is the last question. I've experienced difficulty with getting a revenue digital cert in the past, significant delays in the last 12 months. Has this been improved in recent months?
I can't honestly say it's outside my own remit, but certainly I know we've been looking at improving all aspects of the electronic applications for everything. So we're hoping that by the time PAYE Mod is ready to go live, that a lot of the systems will actually have been improved, and we have certainly improved capacity on a lot of the systems.
And presumably if there was a delay, I suppose you'd acknowledge that if somebody was late with their submissions.
Yeah.
I suppose it is going to be very fundamental to the success of the new system, but digital certs are going to be, you can turn them around,
Quicker.
Yeah.
And we're cognizant of that as part of the design build.
Okay, I think we've gone through all the questions. I don't think we skipped any.
Okay.
So we're all done. Thank you.
Yes, well listen, thank you very much for attending today, and thank you Sinead for coming along, and Audrey, and Sandra, and Rachel for making everything work smoothly. So thank you all.
Thanks very much.
Bye.
Bye-bye.
Bye.